Welcome to Module 3, guys, of our Advanced Price Action course. I'm Ryan with NFX, and in this module, we're going to be going over quarters theory. This is going to be a little bit of a shorter module, but I wanted to make sure I went over this with you guys because I am kind of a big fan of quarters theory when it comes to larger time frames and a little bit on smaller time frames as well. And I want to make sure that you guys are familiar with it, that you have it on your radar as well as on your charts. So quarters theory is basically the theory that price does not move at random. You know, we tend to think of the market moving just completely at random, and we try and do technical analysis to kind of hang on to the tail of that hurricane or that tornado, and that hopefully will land in a good spot, hopefully land in profit somewhere. But the quarters theory poses that the market actually moves, if not on a subconscious level, in between whole and round numbers. That even though it may seem that it takes, that it moves in between these very random numbers, that for the most part we as traders usually look to enter and exit the markets at whole or round levels like 50 or 60, and that banks and institutions also enter and exit their positions at these levels as well. Hence, that's why price reacts to it. Like, if you think about it, if you're going to ask to borrow money from someone, right? You don't ask them, hey, can you loan me $5.56, right? You don't. You just say, hey, can you loan me $5, or can you loan me $6? We always subconsciously round numbers up, and I don't know if it's OCD or if it's just human nature, but we always look to round these numbers up just to the next level, the next digit. And because of that, quarters theory kind of plays into that, and we can see the market, if we look at it from a quarters theory perspective, does move in that way. Okay, so these are psychological levels. Okay, it's kind of that hive mind mentality that we all don't mean to exit our positions at the same place, but somehow we kind of all end up getting to that same place in the end. And a lot of that is because when our larger banks and institutions are placing orders or deciding to take profit from orders that they have open, they're not going to tell their desk traders, hey, enter Euro USD at 1.2687, right? They're not going to take it, they're not going to enter in points, or 1 or 2 pips. They're going to say enter at 2300, enter at 2350, right? They're going to enter their positions at these larger numbers, and they're going to exit at these larger numbers because it's just easier to keep their books by these larger numbers. So knowing that, we want to understand where these major quarter levels are and use them in our own technical analysis and in our own trading. So the major quarter levels are set at 250 pip ranges in an overall larger quarter level of 1,000 pips. So a major quarter level is 1,000 pip range broken up into 250 pip increments. And then we have our small quarter levels, which are our round numbers, our minor numbers, and those are broken up into 25 pip increments, but we want to look at them on the 100 and the 50 pip level. Okay, so our major movements, these are going to be our daily and our weekly movements. We're going to look at those moving from one range to the next, almost like pivot levels, right? These 250 pip ranges are kind of pivots. The price will move from one to another. And once it's completed that movement, then it's either going to look to head back down or keep going up to the next level. Then we have our smaller levels that we want to see price move in between, and that's going to be on our 4-hour or 1 hour, and to a smaller extent our lower time frames for scalping as well. And I'm going to show you an example of how we can apply that on smaller time frames, which is much lesser used. A lot of times when you'll hear people talk about quarter points or quarters theory, they're talking about swing trades and these larger trades. but if used correctly, they can absolutely be used on our smaller time frames. Like I said, we'll take a look at that in just a second. So here's a major whole number range. This is our 1,000 pip range. Okay, and this is showing how price is moving in 100 pip increments from one step to the next until an entire 1,000 pip movement is done. Now the quarters theory breaks this up into 250 pip quarters. Okay, so we have our large quarter points, our major half points, and then our major quarter points. So a large quarter is going to be your 250 pips, your major half is going to be 500, and your major quarter or major large quarter is going to be 1,000. So how this works, and this is directly out of the book, okay, is that the quarters theory is based on the premise that the daily fluctuations of the Forex exchange rates, they are not random, and that currency exchange rates fluctuate in an orderly manner between the large quarter points within each 1,000 pip range, defined by two major whole numbers, okay, or major large quarters. Now the quarter theory proposes that every significant price move in Forex takes place from one large quarter point to another, and it does this in increments of 250 pips, right, between these 1,000 pip large quarter points. Now this challenges the notion that the financial markets are chaotic and that market prices are random. Within its clearly defined constant price ranges of 250 pips, and orderly price moves from one large quarter point to the next. And the quarters theory organizes the daily fluctuations of currency exchange rates into a systematic arrangement. The quarters theory provides kind of a roadmap. The 1,000 pip range divided into 4 equal parts, or 4 large quarters of 250 pips each, and establishes the route with a distinct starting point and a clear destination. Every significant price move, okay, begins at a large quarter point and it ends at a large quarter point. Okay, and we'll take a look at that on an actual chart, and you'll see that it's true that price always starts at one large quarter and it always ends at one large quarter. It's just the way that it gets there that will vary. Okay, it's just variation on a theme. Now, the quarters theory also divides each large quarter in, of 250 pips into 10 equal parts, or 10 small quarters of 25 pips each. Okay, so this is a smaller quarter point of 100 pip range, and it proposes that currency exchange rates fluctuate in an organized manner not only between the larger quarters but also in the smaller quarters of the 100 pip range. And again, we'll take a look at that. Now, I'm not a big fan of the 25 pips of the small quarters as much as I am of the half point of the 50 pips. It's kind of how we don't use our support and resistance based on 15-minute candles as much as we do on our H1 and H4. And the reason being because those levels the price doesn't react as much to those levels as it does to the higher time frame levels, and the same is going to be, with quarter points. Okay, so let's take a look at it on a historic chart. Now this is the completion of a large quarter on the Euro USD, or sorry, of USD JPY. So this is a 1,000 pip range in 2009. So we started out here at this large quarter point of 90. Okay, just 90 flat. And as you can see, price came up, down, until eventually it hit this large quarter of 92.50 and kept going up, a little bit of a retracement, hit that half point, that major half of 95, continued up, hit 750, and then retraced, hit it again, came back through and hit 95 one more time and had a little bit of overshoot. And that's going to happen with quarter points. Okay, it's not going to hit it exactly every time. Sometimes there will be overshoot, and that's discussed in the book. Reason being because even though the larger hedge funds or institutions may exit at that level, You still have retail traders that are kind of holding on for dear life. They still have their open positions. They're still taking that drawdown, or maybe they haven't taken their profits just yet. And once everybody finally closes out, then we start to see the reversal of a trend. It breaks through, hits the 750 again, and just coming off of our market structure modules, you can see right away exactly what this market pattern is, this structure. We have an inverted head and shoulders hitting exactly at these quarter point levels almost perfectly, and then continues up and completes at this major large quarter point of 1,000 pip range. Okay, so that's a good example of price beginning at a quarter point and finishing at a quarter point, just fluctuating up and down in between, but it does finally end at that final destination. Now let's look at a chart. So here we have Euro USD on the daily, and these levels that I've set on my chart go every 50 pips. So the dashed lines are 50 pip levels, and then the smaller lines are 100, and then the thicker lines are my 500, and then obviously 1,000, right? So as we can see down here, price started at the 1,000 pip level, right? This is actually 500 level, okay, but we'll start here. So we started at this level, and we're just talking about moving in between 1,000 pip range. Now, as you can see, price already respecting other quarter point levels. Here we have it respecting the 100 pip level, okay, tapping that multiple times, almost getting like a triple or quadruple bottom. And we had a double bottom here on the 500, and then price comes up, taps this level exactly, this 100 pip level, nice, drops down, hits the 100 level again, comes up, and then hits the 500 perfectly, taps the 50, comes up, breaks through, and then we have a little bit of consolidation here in between levels, finally does break out, hits right about the 500 again, and then it comes back and hits this retest right here. Nice little tap. When it hits that, that's when you want to definitely get in for a buy. Excuse me. Then continues on up, taps the 100, taps the 100. You can see price moving in between these levels so often. Then we have a nice triple top here on the strong 500 level. It goes about 100 pips over, right? Comes back down, hits another 100 level, hits another 100 level. And you can see price just continues going until it is now finished at this level, which is another 500 pip level. That's where we are currently to this day right now. At this, which is also a very strong level of support and resistance from in the past. See right here. So you can see that these levels, that price does react to these levels, and that's why I want you guys to just be aware of them, have them on their chart, on your chart, because when price reaches these levels, that's why we want to look for price to react at these levels, to get rejected at these levels, because price is moving in between these levels, and then that gives us our opportunity to catch these movements. Okay, so this is on a larger time frame. Let's take a look at it on a smaller time frame, and I'm gonna show you what I was talking about as far as price being able to us being able to use these quarter points on lower time frames. But let's just take a look at, so this right here, this was our 1,000 pip move. Okay, so we had from here to here, price started at a major quarter point and it ended at a major quarter level. So there's our 1,000 pip move, and then here was our second 1,000 pip move. And this 500 pip move right here, that just happened last month. Within 1 month, just within January, price had spiked up and completed an entire 500 half quarter level major half within a month. So it doesn't always have to take a year for these things to play out. that's why we want to keep our eye on it. Is once we see price start to go from one level to another, it's just a matter of time, and we want to get in on that trend. Now here's a good example of scalping on the 5-minute time frame. So people don't usually think of using quarter points on the 5-minute time frame, but this is a scalping method that I'll be teaching you guys later on down the road. This is a more advanced method of scalping. I've been backtesting this method quite a lot, and it's actually very valid. It's a very simple way to do it, just based off of divergence. But let's take a look at this 5-minute divergence scalp based on quarter point levels as a psychological level. Okay, so we start here. We get our first push downward on price, and it makes this lower low. And the reason why it's significant is because on the RSI, it enters into our oversold area below the 20. Usually the RSI is at 25 and 75, but I've extended these out to 20 and 80 to make a major oversold level. So I know that once it's below that, we're really looking for price to reverse. But what we want to look for is a sign that it's ready to reverse, and that sign is divergence. So we get our divergence on price here, right? And then we also start to get our divergence on the RSI, which is what we're measuring our divergence with. Right? So we get that, but we need to know where is the place to actually get into that trade, right? Is it here? Is it here? Is it here? Well, this is where our quarter points come into play, because as you see right here, price hits this psychological level with a almost a perfect little tweezer bottom there, but we get these wicks, these really nice wicks that tap this 50 level, or actually this is a 100 level. Yeah, that's a nice 100 level. So we see that. That's our entry. That's our entry. That's when we know we want to get in. We can either get in here on this wick tap, or we can wait till here, and then we take our 5 or 10 pip scalp. This went up for 50 pips, so it would have been an excellent trade to take. You could, and it never looked back. Never looked back. If you would have gotten in here, you would have taken about 15 pips, 13 pips worth of drawdown. But this psychological level was never broken, and it just continued up and up and up. If you would have just set a take profit and then let a second position run with a trailing stop, it would have been a very nice trade. But that's an excellent example of how these psychological levels sometimes, not always, but sometimes can help us find entries into our trades. And that's why we don't want to overlook these levels. We want to, keep in mind that price wants to travel in between these levels. As you can see here, it went to the 50. And now it's been traveling in between this 50 on this level. Here we had a breakout, retest. This is just a simple break and a retest of this 100 level down to this 50. And then when it broke out again, down to this 50 in this 100 pip range. So we want to have that in our toolbox as something to use to look to go from chart to chart. Now, something that I wanted to give to you guys. Well, first let's go over homework. So your homework for this module is I want you to watch this video 5 times. Okay, make sure that you watch this video 5 times. I know that quarters theory is it's a very easy thing to wrap your head around, but I want you to make sure that you're adding this into your toolbox and that you have, it completely ingrained in your mind that these levels are levels that you need to keep an eye out for, not only for entering trades but also for exiting trades. Now, I want you to give me 4 chart markups showing major quarters, and I want 2 of them to be on US dollar pairs and 2 of them to be on JPY pairs. And no, you can't just send me 2 pairs of USD JPY. Okay, it doesn't work that way. But the reason being because US dollar obviously is 5 digit, it has 5 decimal price numbers, and then JPY has 3 decimal price numbers, and so I want you to be able to learn how to place quarter points on both of those decimal structures. So give me 4 charts showing major quarters. That's 1,000, 250, 500, 750. Then 4 charts showing small quarters, and that's going to be your 150 quarter levels. Okay. And they can be like, you can do 4 charts of the majors and then go back and then just remark up those same 4 charts with the minors. I'm totally fine with that. But I do want 8 completely separate charts. Don't just mark up all the majors and the minors on and just send me only 4 charts and say, blah, here it is. No, I want 8 charts total. Okay. A lot of you guys are already starting to cut corners and do like homework. You guys are starting to send me stuff not the way that I'm asking, just the way that you feel like doing it. Okay, no, I will not accept homework just the way that you guys feel like you want to do it. No, I want you to send it to me the way that I'm asking for. Okay, I'm asking it for a specific reason. And if you can't, like if we're already into module 3 and you're already starting to do things like your own way, then come on, then we're already starting to have a problem. Look, follow the videos, follow the instructions. There's a method to the madness. Just have faith in the program, okay? And then when you start trading on your own, you can mark charts up whatever way that you want to do it, all right? So I need 8 charts from you, and then I need 2 more, so 10 total, showing price reacting at these levels, okay? I want you to highlight where price is completing at major and small quarter levels. Okay, I'm going to give you the quarters theory PDF in your bonus folder in our Google Drive. I dropped that in there for you guys, so you guys have a copy of that now, so you can refer to that if you need to. And if you want to also highlight, if you see them like we saw earlier, reacting in a pattern like a inverted head and shoulders or something of that nature, feel free to do that as well. That's bonus points. So speaking of bonuses though, I want to give you guys your second bonus of the course. The first bonus being the quarters theory book. Second one is going to be something I think you guys will like, and that is going to be this indicator that we have for this new ZenFX indicator. As we saw here on the Euro USD daily, it is the one that paints these lines so that you guys can just automatically add your quarter levels to any MT4 chart. And so for that, it will be this one right here, ZenFX quarter levels, right? And the way that I have it set up on Euro USD is you go in here, and I've got all mine lines to black. That's the 500, that's the 100, this is the 50, and then this fourth one, this is the 25s, and I leave that off, so I just change that to white or whatever the background color is of your charts. Hit OK, and there you go. Look at that right there, reacting right at that level. Tap, tap. Okay, exactly. So I will send that to you directly in your Telegram channel once you have completed all the homework assignments up to this point. And all the homework assignments, I have to give you the thumbs up and say that they're done correctly. Once you have done all the homework assignments up to this point, I will send you that bonus indicator as a gold star for having completed up to this point, and you will be good to go. All right, guys, that's it for this video. Next module, module 4, will be the video number 4 will be the completion of this module, and we're going to go over the differences between a breakout, a retest, and what our 3 main types of entries for entering a trade are. All right, guys, trade well, and I will see you in the next module.